Okay, so hello to you all. Welcome to the showcase video of the new crypto product which I've been working on for the last month. It's called Herus. It's going to be similar with the Dominus product, meaning that it's mainly used as a correlation base on the 30 minutes time frame period chart with the BTC asset. But for the calculations and for the logic is going to be fully different than the Dominos. The reasons behind it is that I'm using mainly now, a volatility calculation, the same like we have on the calculus. But instead of having the formula from the calculus, I have decided, at least, for the first versions, to go with the traditional ones. And then later on, I will be working on in trying, to polish this and improve this. I've been testing it already, for the since December, I would say, more or less, and I've noticed so far that the results are much better than the Dominos. And also, I have to say that because of the risk management that it has inside, which I'm going to explain later on, it's also going to come with a much bigger drawdown because it's, as I said, it's a more aggressive product, but not aggressive in the number of trades because it's still a swing, but on the way that it takes them. So anyway, let's get on with it. I'm going to explain first the menu. So in this case, just like with the Dominos, we are going to have the correlation option if we want to use the correlation or not. In this case, I'm going to be correlated with the BTC USDT chart. This is going to be our risk management that we have in this case, the highest high and the lowest low, meaning that, for example, from the current point, so let's say, for example, we are here. In this case, for the long period, in this case, I'm going to calculate the lowest low. So I will take, for example, 100 candles. And we can see that more or less if I will take 100 candles, the lowest low, it would be this point. So we can see that, well, actually I can take this one because it's going to be easier. So you can see that at this point when we enter from here, we can see that our lowest point, if I will have to take 100 bars, it would be more or less around here, which it would be 7% approximately. So if I will have to take this position, you can see that initially, but I believe the calculation was here, more or less here. I will take from this candle. You can see the 6.8. And when we enter, you can see that at a certain point it was hit the 6.8 and we exit on the, on the second candle. So in this case, we are going to take the lowest low point, the low within 100 candles, and that's going to be our take profit. And for the stop instead, we are going to use always the reverse condition. Or as well, I have inside an ATR calculation, and that can help with the stop loss protection as well. And for the short, it's going to be different. So in this case, for the short, I will take the same. Let's say from this place, I will take 100 candles for the highest high. And we can see that more or less it was a 3.5%. And if we were to take, this one. 100 candles. More or less to be a 6.4. But we can see that we had multiple entries. So because, but yeah, I would say it's a similar, it's a similar scenario. Like I believe here it can be seen. So from this point, if I will take 100 candles, you can see that it would be a 5.11%. And once we are going to exit entry here, you can see that this candle, starting from this point, you can see that we will get that 5% and we exit on the next candle. Because the calculation is from here. So yeah, the calculation is not from the entry point, but it's from the candle where the alert trigger. So it's going to be before. But we always enter with the strategy, one candle after in order to avoid the repainting issue. But more or less, we took as a resume, highest high and the lowest low points within the 100 candles. And based on that, we are going to use it as a take profit. Instead of the parameters, so in this case, I'm using a double moving average. And this double moving average is going to be made. So in this case, for example, we take it initially by a 10 length. And then I'm going to repeat this process 20 times because in this case we have 200. And out of these 20 times, I'm going to make an average of these averages. That point multiplied with the, by 3 times is going to give us a long and a short top and bottom. And these bottoms is going to act similar with the Bollinger, you know, if you guys know around the Bollinger strategy. So this is kind of like similar with that as a main core idea. But definitely, you know, there are going to be much more things inside, you know, for the calculation. You can see that for the moving average type, we have a big list of parameters which you can use. Currently, I like the SMMA, but if you want to make your own choices and your own calculation, I would recommend you to do the next process. So we are going to use the entire deep backtesting. And when we are going to use this deep backtesting, like for example, we can see that in this case, we are going to have these results. And I would like to have, you know, more or less the same movement and the same stuff, you know, like for example, if we can see that on average, for example, I used to have 58, close to 60%, and my risk reward is 1.2095. Then, for example, if I look in the recent data, I like to have more or less similar results. And we can see that percent profitable, it's still there, it's 60%, or the average 58, 60% is very close. And if I look on the risk reward, you can see it's kind of similar, 0.9 and 1.2. Not such a big difference. So because of that, you know, I consider it like a valid test. So yeah, I would always recommend to do the optimization on the full process, and you are going to after that test the initial one. And then the same, you are going to make sure that, for example, if you are going to use a correlation pair like with the ATH, you would have similar or even better results. Yeah, we would like better results in this case. So yeah, that's more or less what we have for the BTC USD. Alright, let's go back to BTC USD. Now, we have a volatility external filter, which in this case is going to come from the BitVol 24 hours. So with this one, it's going to help us to, it's like an ADX filter, we could call it. It's going to help us, you know, smooth the trades when there is a side market, because as you may know in general, with all the trending strategies, the main issue, you know, is the side markets. And this one is going to help, you know, by a certain degree into it. And then of course, this one is going to be for the full backtest, where you can see the difference compared, you know, to a buy and hold asset, like for example, the alpha, the buy and hold of this asset, you know, and so on. Like for example, if I would activate it, we can see that, for example, for this year, you can see that actually the buy and hold outperformed us by 3.24%. But for example, instead last year, we outperformed the asset by 170%. So yeah, that's more or less how you can calculate it. And now regarding the how to make the strategies, like I said, there are two types. If you are a semi-automatic and a full automatic, I will show first the full automatic way. So in this case, we have the alert and the strategy. We always have to make sure that the settings are the same. You can see 100, 3, 10, SMMA, 200, BVol 24H. These are the main factors which are going to be the same. Now regarding the alert, we are going to go on the alert. So we'll have, for example, long entry, long exit, short entry, short exit. We are always going to want to use once per bar close. And in this case, in the message, if you have an automation here, you can copy the bot commands, you know, from the bridge platform that you use, like 3 commas or Wonderbot or Alertatron or whichever. Now, if you are a more semi-automatic guy and you know what you are doing, you have some experience trading, you know, and you understand the markets, you have some fundamentals behind, then in this case, what you can do, you can save like half a candle. And in this case, for example, on the long entry, instead of using once per bar close, we would use once per bar. Obviously, when we are going to use this option, it's also going to give us some repainting issues, because the signal might disappear. This way, for example, when we use once per bar close, it will never repaint because the signal is going to be final. But yeah, if you are that type of guy, like for example, you can get an alert. So imagine, for example, in this case, you would get the alert like here, and you would save, you know, this thing. And the same for the exit, like for example, the other thing that you can do for the exit in this case, for the entry, both for the long entry and the short entry, like I said before. So for long entry and short entry, I would recommend to use once per bar close. But the exit, if you want to take the fastest approach, then you can use once per bar. and in this case it's going to give a fixed tick value, like for example, like we said before. So in this case, for example, if the distance would be 3.5%, then we are going to get 3.5% and not exit on the candle close. So yeah, I hope this is all self-explanatory, and as always, if you have any other questions and details, just let me know. So yeah, thank you all for watching and see you around next time. Bye bye.